we all started to question, right? What are we doing here with the financial systems? Why are we relying on central banks? Why are we still relying on card networks and other proprietary bank systems to transfer money with all these added costs and risks and exposures? The internet is freed up information. We can now trade, information. Providers like Skype, and they enabled us to complete voice calls over the internet. We had voice over IP, which is a great technological innovation. Suddenly we were freed from, the landlines and the mobile roaming charges. We could use the internet to speak. Well, now with Bitcoin, we have money over IP. We have the ability to send money securely as we can send or as freely as we can send an email. We can now securely send money. And that was an incredible, in our estimation, innovation, and probably the single most important development in financial technology ever. Okay. And so we felt that it justified our leaving CyberSource, our leaving Visa, to develop and launch a platform specifically tailored to enable merchants to accept Bitcoin, to obtain all the benefits of accepting Bitcoin, but without a lot of the risks and without a lot of the costs of having to handle the private keys, convert the Bitcoin back into fiat, which merchants still need, okay, to pay rent, to make payroll, to pay vendors, and guarantee the payout right at the transaction, at the cost of the transaction to the merchants. So we saw an opportunity, in effect, to create a services layer on top of the Bitcoin network to enable merchants to accept payments from anyone with a smartphone and access to the internet.
Yeah, I think this is such a compelling thing. I think that's when one explains Bitcoin to someone. I think it's always those cases, or remittances is another one, that just kind of makes sense to everyone, and it's really easy for people to then see that it's such a compelling thing. I think when we look at the realities of it, and I'm curious about your opinion on that, because for a consumer, that maybe insecurity of the credit card network can actually be almost a feature, right? Because it allows one to sort of claim back the payment in case something goes wrong, or if you're dissatisfied with the merchant, right, with this pull payments. And that's not the case with something like Bitcoin. So how do you think about the aspect of consumer protection and the aspect of how it appears to the consumer in this context?
Well, so and we're now using the case where a consumer has access to a credit card, right? So
right,
and I agree. That's a frequent analysis that we perform. Is that if you have a credit card, and despite a lot of the frustrations that we just mentioned, the fact that your card might not work. In fact, I ran into that twice just in the last week trying to buy airline tickets. Okay, trying to get from Europe to the United States. I won't name the airline, but in one particular case, I had to try 3 or 4 different ways to get to buy a ticket on that carrier. And I finally had to go through a travel agency that would recognize my credit card and authorize me. That's incredibly frustrating.
Right? You know those travel sites where you can buy with Bitcoin, right?
Well, I tell you, unfortunately, I do know those travel sites well, and this particular airline was not hooked up to that travel site. But again, I mean, all kidding aside, that is the solution, right? I mean, if I were able to spend Bitcoin on that airline, I could have gotten 30 minutes of my life back, right? So, but we'll put that aside for some time being, because I know, Brian, what you're trying to get to is a consumer protection element of, I'm now pushing cash to that airline. Okay, if that airline doesn't fly, how do I get my cash back? And that, the technology exists for that today. I know that's an increasing area of focus and inquiry for some regulators. I know in the U.S., the Federal Trade Commission has just begun providing some guidance, some kind of consumer risk warnings. I know central banks the world over have likewise issued, even if they're not regulating Bitcoin, they're issuing guidance to say, consumer, caveat emptor, consumer beware, guard your private keys, don't deal with unscrupulous merchants, et cetera. But the fact is that the technology exists today to enable consumer protection on any Bitcoin transaction. And I think it was an important enough consideration that it was addressed right in the initial white paper, and the whole notion of having an intermediary function accomplished through a smart contract, right, through multi-signature transaction, where the Bitcoin is subject to some additional conditions, okay, before it can be further transferred, and that's a service that we can provide today.
Yeah, I think that's a really interesting way of looking at it, right? Because one way of looking at consumer protection in the current card network, you could say, oh, the card networks are secure, so it's always possible the card was stolen. So as a consumer, if you call them and say like, hey, this was a fraud, this was a illegitimate payment stuff, you get your money back because they can be sure. Whereas with Bitcoin, it's like cash, but then it does have all these programming capabilities and multi-sig and things like that. So you can sort of layer consumer protection on top of that in whatever way you want, right? Maybe sometimes you don't want it. Sometimes you want to have a third party. Sometimes maybe you want to pull data from APIs to determine whether the payment's made or how. And so I think that's interesting. Of course, it's a considerable engineering effort. It's hard. It's going to be hard to coordinate and to standardize. And also, I think it will be hard for consumers to know what to expect, right? Because if you have different types of consumer protections in all kinds of areas, one of the advantages of a credit card is that there's like one number to call, and you can deal with it.
If you have a credit card.
If you have a credit card, yeah. If you don't, yeah.
Well, I'm just saying that's an important consideration, right? We're talking about the billions of people now who,
right,
can get online, but that doesn't eliminate the fact that okay, those billions of people can now shop with Bitcoin, but they're still subject to the unscrupulous merchants who don't deliver on the services or the goods. And we do think that there are near-term use cases, and we have a best practices kind of turnkey solution that we can offer to retailers today to basically say, okay, this is how you handle refunds, disputes, and consumer protection to the extent that you want to offer the ability. And so a good example would be a marketplace, right? Where it's one thing if it's a high street name brand retailer with whom the consumer may have a prior relationship, or to whom the consumer is willing to place a great degree of trust in just the refund policy. If it's, say, you're on Etsy, or even eBay or some marketplace, and you're going to purchase the hypothetical used Rolex watch, right, from another seller, you have no connection to this seller, probably will never deal with the seller again. Yet you're going to push that seller digital cash. Okay, what is your recourse? And in that particular scenario, we would say, well, we could set up a multi-sig transaction where, in an automated fashion. And by the way, these solutions exist today. They're providers like Gem, BitGo, right? This is not something that needs to be built. It exists, right? We're all using this technology for, corporate treasury and financial controls purposes. But this could be a consumer-facing service where the consumer can say, okay, I'm going to spend my Bitcoin and buy this used Rolex. And I know that, if that doesn't show up within 5 days, something happens, right? And there's a condition that's tied to a timeline that the condition expires if the consumer, receives the Rolex, inspects the Rolex, sees it's a valid Rolex, it works, etc. The condition expires, right? It's in some period of days, and then the Bitcoin is capable of being transferred off the blockchain, sold on exchange, etc. That technology, that solution exists today. But I think, Brian, to your point, that's our best practice that we've kind of pieced together. It's not a standard, okay? It's not like an operating regulation necessarily being dictated by, a duopolistic card network, for instance. But at the same time, it's something that for a consumer who's concerned about their exposure, should be sufficient. Okay, if that consumer has decided they want to pay with Bitcoin, and that could be because that consumer is in, Malaysia, right, or South Korea, or someplace where they don't have a credit card, or the card is not going to work. For some reason, that consumer has decided to pay with Bitcoin. And there are a lot of use cases where we can, explain or describe where that would be the case, where they would want to use a Bitcoin transaction instead of a card. We can protect that transaction. We have the technology today to help protect that consumer. But it's a space we have to keep an eye on, because I think that, to your point, if each country regulator jumps up and requires, a different standard or a different solution, that could get complicated, and it could cause consumer confusion. And any sort of kind of siloed regulatory approach, we have found, carries with it the risk of disrupting the global appeal of Bitcoin, right? I mean, if it's going to work differently in one country versus another because of these kinds of regulations, that's something that we need to nip in the bud. And I think, the only way really of doing that is coming up with some sort of, best practices, right? That, the industry itself comes up with.
Let's take a short break so I can take you to Paris. I dropped into La Maison du Bitcoin, the House of Bitcoin, in the heart of Silicon Sentier, home to many startups, including Ledger. And I spoke with Nicolas Bacca, Ledger's CTO, about their recent membership in the FIDO Alliance.
So the FIDO Alliance is a group of industrials dedicated to remove the use of password from the web. So we decided to join them because we think that Bitcoin is a very close protocol, technically speaking, to FIDO, and enhancing Bitcoin products with that kind of feature is very useful for everybody. So this will enable you to log on easily into websites in different ways. For example, with our NFC product, you will be able to log on into a service by tapping the device on your phone, or by tapping the device on an NFC reader. You will have a way to authenticate without passwords in a standard way. And the standard way is really important because there have been a lot of initiatives trying to remove passwords from the web, but this will only work if they are interoperable. You don't want to lock users into single solutions. Given the traction that FIDO has today, you have supporters like Google, like eBay, like PayPal into it. We believe that it is the best standard to do that.
So definitely look forward to future Ledger products being FIDO certified. In the meantime, you can always count on the Ledger Nano to keep your Bitcoin safe. So don't delay in getting a secure setup today. Go to ledgerwallet.com and use the offer code EB09 to get 10% off your first order, and that offer code is valid until September 30th of 2015. We'd like to thank Ledger for their continued support of Epicenter Bitcoin.
When we talk about adoption, you mentioned, I was making the comparison to credit cards, and you're certainly right, that may not be the best comparison, because for consumers, credit cards work reasonably well. At least they seem to work reasonably well, because the costs are sort of hidden, right? They're just put on top of the price, but you don't notice it as a consumer. Does that mean that you guys at BitNet will focus on maybe some of those niches and markets where that's not the case and payments don't work well, like maybe gambling, some online things that card networks don't work with, or remittances, micropayments, maybe Internet of Things, although that's probably still quite far away until that's really going to become a big application?
No, exactly right. We're looking at all those use cases, and I think you're onto something that, some of the areas of early adoption could well be tied to places where credit cards just are not working well today for whatever reason. So our focus is that, look, if it's legal, okay, in the jurisdiction where the business is being conducted, okay, if it's regulated, is the merchant capable of complying with those regulations? Because we analyze this a lot, and frankly, with some of our banks, the notion of being a high risk merchant in a credit card and a card acquiring